With the US markets taking a breather last week, we thought it was a great opportunity to set our sights overseas and take a look at one of the strongest countries out of the European Union and also go over something that happened last week that may derail the US and China trade negotiations.
All four of the major US indexes were negative last week, and they were all down right around 0.5%. But the NASDAQ is still leading the way up this year, just under 30%. And the S&P 500 is still up over 24% year to date. Foreign and emerging markets were both also down around 0.5% last week. And now foreign markets are up a little bit over 15% for the year, while emerging markets are up just under 10%. Today we want to look at two overseas charts. We want to start with the Seng, which is China's stock market index. And Matt's going to talk a little bit more in the news section about exactly what's going on between China and Hong Kong. Now, if you're looking at the chart, you can see that the Seng made an all-time high at the beginning of 2018, but then for the rest of 2018, consistently sold off throughout the end of the year. Now, the first quarter of this year, the China stock market made a nice little rebound, but has been trading in a wedge ever since then. And you can see that at the far right of this chart between the two blue lines. The Seng is currently right in the middle of that wedge. And there are a few news stories involving China with the US and China's trade relations and the protests going on in Hong Kong. So depending on how these issues end up, we could see a big move one way or the other. Next, we want to look at the DAX index, which covers Germany's stock market. Now this chart looks a little bit more interesting than the Seng did. If you're looking at this chart, you can see that the DAX has been on an uptrend since the beginning of 2016, and that's for almost 4 full years. And you can see that with the bottom blue line on the chart. Now towards the end of 2017 and then the beginning of 2018, the DAX index went up and reached around 13,500 and has put in a resistance level from there. And now we're currently right back up at that resistance level. So a break above that top blue line at this resistance level around 13,500 would be a positive sign for the global markets moving forward. But if we see a rejection here at this level, then that could spell trouble for the global markets moving forward, as it may form what's known as a double top pattern, and that's a bearish signal moving forward.
As Jared mentioned, the Seng index is in a wedge, and whether or not that wedge breaks higher or lower probably depends upon what happens with the US and China trade deal. And one of the big things that could impact that trade deal is what's going on in Hong Kong. So for the next couple minutes, I'm going to try to take a very complex subject and break it down so you can figure out what exactly is going on with the Hong Kong protests and how it could impact the US and China trade deal. So first, for the backstory. In 1997, Hong Kong was originally part of a British colony, but now it became part of mainland China under the One Country, Two Systems agreement. Under this agreement, Hong Kong citizens would keep their laws and judicial system, and that agreement wasn't set to expire until 2047. But back in April, mainland China tried to pass a bill stating that they could extradite Hong Kong citizens to mainland China and try them under their laws and in their own judicial system. Now, it's always been a pretty rocky relationship between China and Hong Kong, but since April, the protests and uprisings have really amplified. Now, the protests continue to this day, even though the bill was withdrawn in September, as the Hong Kong citizens now want a full democracy. And now let's fast forward to what happened last week. Last week, the US House and Senate passed the Hong Kong Democracy Act of 2019 bill. And that bill essentially says that the US backs the Hong Kong protesters versus China. And that bill is currently on President Trump's desk as we speak. Now, also complicating matters, over the weekend, the Hong Kong elections were held and the pro-democracy party won in a landslide. They won 389 of the 452 available seats. So obviously this is going to continue to cause more tension between Hong Kong and China. And the decision that President Trump has right now, whether or not to sign or not sign the Hong Kong Democracy Bill, is going to directly impact what happens with the Phase 1 trade deal with China.
We have a short week this week due to the Thanksgiving holiday, so the biggest thing that we'll be keeping our eye on is if President Trump decides to sign the Hong Kong bill that Matt just talked about.
Thanks for watching, and please share our video, and everybody have a great Thanksgiving holiday.